if you're watching the short term, the midterm charts right here on Bitcoin, this move out of this upper trend line, breaking the upper trend line, breaking the 20-day, the 50-day moving average, around 11% breakout for Bitcoin, that move is huge. But in this video, I want to do something. I want to dissect that move. I want to allow us to reel in the 11% breakout excitement, to reel in the emotions. This video is going to do just that. It's going to bring in the macro. It's going to show you the story that revolves around that little move on Bitcoin and why it's important. The other thing in this video we're going to look at, especially if you're a macro-minded investor, if you're trying to figure out how to approach these markets and win in the long term, we're going to dissect some other charts that give us such a strong visual roadmap for what is in store. And right now, I truly believe this. This is how I view things right now in the crypto space and even in equity markets. Right now, the greatest opportunity that we've had in a very long time is getting ready to be here. And so we have to be on our game in terms of the macro charts. Right now, this isn't a macro chart. This is a more short-term, mid-term move. This is kind of a mid-term chart, right? This is extending back to June. We've had some consolidation, and we get this break. But that break, in my opinion, is nothing to overly excite us. This isn't a bull market confirmation, right? And we haven't even really had too big of a separation from the break itself. But I want to just digress from this chart for a second. We're going to come back to it, but I want to start here. This is an article. Here's why Goldman Sachs is warning about a stock market crash and recession. Number one, I think we're in a recession. I think a lot of you out there agree with that, right? So let's push that aside. But a stock market crash, a warning about a stock market crash. CEO David Solomon not only warned that a prolonged recession is approaching, but that the Fed will likely raise interest rates above 4.5%. Why wouldn't policymakers stay aggressive? And this is something I wanted to just kind of cover really briefly before we jump in to these charts that play so strongly into the macro. The last consumer price index showed inflation running at a 4-decade high of 8.2%, which means that the Fed is struggling to get it anywhere close to its 2% target. Everyone, why would we think for a second, put aside an 11% breakout for Bitcoin, why would we think for a second that we're out of the woods? Really? Why would we think that? I don't think that. And that's why I'm maintaining this opinion. I'm putting it out there. I would love to be wrong. I just don't think that. Other commentators have predicted even 3% in 2 years is a long shot and that inflation could hover around 6% for another 5 years. Imagine 6% inflation for another 5 years. What if that was the reality? I don't think that would affect crypto for 5 years. I think there would just need to be a little bit of a cushion for markets and market sentiment to get used to that idea, for that to be priced in, right? And that would take a little bit of time. So I wanted to cover that real quick before we really dive into the charts. And we're going to start here on the S&P 500. Now, this is the bars pattern. I charted that back here, and this was 3 weeks ago or so. Take a quick look at this clip. Bottom B. Will there be one last rally, maybe in October? And look how the charts play into this. No meeting in October, no Fed meeting in October. Maybe there's kind of a glimmer of hope for markets as they move to the 20-week moving average, and then finally a capitulation type of event. So that move, again, speculative, is just, we talked about that speculative move basically to tie into the macroeconomic landscape that we're in right now. And if you look at the chart, there's the bars pattern. I'm going to remove it, but check this out. Here's that little rally that we were discussing to the 20-week moving average, and look how it played out. Right now, I don't know what's going to happen next, right? But right now, so far as I do this video, 20-week moving average in green, there's a kind of a weekly wick on the current S&P 500 with a kind of a wick of resistance to that 20-week moving average. Is going to be extremely interesting to see tomorrow how markets close, right? Friday. And then going into next week, what does the next weekly candle bring us in terms of the 20-week moving average, right around $3,900? Will there be a close above, or will there be continued resistance at this area? To give you an idea of what we're looking from a price range perspective for S&P 500, we have around a 2 to 3% move to get above that 20-week moving average. So that was 3 weeks ago. We covered this speculative move, and right at that time, S&P 500 was trading around the 200-week moving average. So we've got the move to the 20-week moving average. Now, during that same time, we were tracking Bitcoin. We were tracking this consolidation setup on Bitcoin. Check this quick clip from around 12 days ago. Maybe sideways, it could maybe get a rally to the upside, and I'm not going to dig into the short-term charts and talk about what resistance is ahead, but maybe we have a month to the upside rally and then we're getting rejected and then it's falling below the 786 line. But no matter what happens, or so that is playing out right now alongside the S&P 500 chart, the 20-week moving resistance. Now, what I want to be very clear on is that was speculative, right? That wasn't me predicting things. We always analyze and we anticipate things to the downside. We analyze things to the upside, but we use these indicators. We use the consistencies of historical data on all of these charts, and we say, this thing kind of happens a lot over and over again. Let's see what it would look like to happen again. We chart it, and then we visually, mentally get our heads in the game to prepare for the scenario so we can simply be prepared, so we can make wise decisions, sound decisions, and not use emotion in these markets, right? So that's what we're doing there. Now, I'm showing and I'm replaying this to track this story, because right now, here's where we are. It's happening, right? We get the move to the 20-week moving average. We got the breakout for Bitcoin on this daily chart of this upper trend line. And if we go over and we change this Bitcoin chart real quick to a weekly, we can see where Bitcoin is. Bitcoin right now, at the very least, at the 20-week moving average. So 20-week moving average resistance for Bitcoin, S&P 500, 20-week moving average resistance. You can go back to Bitcoin. We could say, hey, there could be a continued breakout for Bitcoin. Maybe Bitcoin rallies this weekend, next week, right? We still have this 200-week moving average up here. That's huge resistance, around $23,000 to $24,000. So Bitcoin could just put on a show, could still rally. And if we go back to the daily chart, I still would not be convinced, because of the environment in which we're in from just an economic standpoint and then the world as a whole right now. I wouldn't be so convinced that Bitcoin has bottomed and we're just off to the races. And this is just me being careful, okay? This isn't me calling anything or trying to influence the way that you see things or do things. This is just purely my opinion here. But so we have this potential for even the 20-day moving average to be brought down into Bitcoin if Bitcoin were to even rally more, and we still have all this room for a throwback for Bitcoin. So we have room for a throwback now. We know that after we get these breaks to the upside out of trend lines, out of patterns, we anticipate breaks back down. They're called throwbacks. And we would just see how this upper trend line, the lower trend line hold as resistance. That's the first thing on my radar. Now, ultimately, as kind of this macro-minded investor, I'm still not trying to guess exactly where the bottom will be for crypto, but I'm very much trying to visualize it. I'm at any given time trying to look at, well, if it happened here, would I be comfortable with where my portfolio is? If it went to this price point, would I be comfortable, right? And that's all a part of my own accumulation plan, my own plan for crypto. You have to kind of formulate your own plan based on these speculative scenarios. But here's ultimately what I continue to wait for. So we get the breakout for Bitcoin. And by the way, when I look at Bitcoin, this is kind of a roadmap for crypto as a whole. I'm way more interested in accumulating altcoins than Bitcoin. I just want to throw that out there. But watching the Bitcoin chart with the most historical data in crypto is important to me. And this 786 line down here on Bitcoin, sitting right around 17,000 or so, is important. So we get the break to the upside. Maybe we track a throwback in play. Is there support there? If not, is there support at the 786? And if not, does Bitcoin fall into the bottom range that we've been tracking for Bitcoin for a while? Zoom out on the weekly, we get a sense of that. These yellow lines, these are macro 786 Fibonacci retracements. Bitcoin bottomed below this area in 2018. Bitcoin also bottomed below that area back here in 2015. So is that going to happen again? No guarantees. It is extremely on my radar. It's something I've been talking about for years. We use these Fibonaccis to the upside and to the downside to confirm bull markets and to kind of confirm, from my perspective, bear market lows. We're not there yet, in my opinion, but I think right now, even if you look at crypto prices as a whole, I think they're undervalued. It's just that last capitulation, I think, is still in play. And that's something I am personally being careful about. And that's my own approach to these crypto charts. So it's all kind of tying together, even the technical analysis aspect of things. We looked at this move to the 20-week moving average. Will be interesting to track on the S&P 500 index. the end of this week going into next week. And then we looked at this breakout for Bitcoin on this midterm chart, the 20-week moving average resistance there, and the potential for a throwback if the rally does not continue. Be careful out there, everybody. At the end of the day, that's really what I'm saying. Be careful. Digest the data. Hopefully it's valuable and helpful to you. But at the end of the day, sit back. Meditate on these things. Meditate on the visualization tools that we have and make your own decisions where you're just comfortable. You're comfortable whether we enter a bull market tomorrow or we capitulate to new lows. So that's what I'm looking to do. And this is just how I'm looking at these charts. If you hung in there in this video, thank you so much. I've had a bit of a cold, so my voice is a little shot, but hustling through, everybody. We're getting close to opportunity. And I think opportunity is actually even already here. So with that being said, I think it's so important to keep our eyes open and to be mentally on point. And I think that really just means zoom out on the charts. So that's what I'm doing. I hope you all are well out there. I'll see you in the next video. God bless.